The second technique we have on this, we use breakouts and breakdowns. What happens is we use the momentum shift to the upside. And if we're trending up, we wait for price to push up, come back down. You put a line here to take a breakout. You take calls right here. Guess what? You get expansion in your favor. Price then resets. We take a breakout right here. One just triggered. You'd probably put a hard stop right here or potentially right there, depending on your risk tolerance and how much you wanted to lose in that trade. But in a very good trending day, you're going to win a lot of trades. In a choppy day, breakout traders like myself, we don't have the best days. You come and look at yesterday. What do we have here? Breakouts and breakdowns. We're trending down, right? Price pushes up, comes down. You take a breakdown right here. Here's your stop. You get stopped out for a loss. Well, what do you say? Bummer, right? Well, that's risk management in trading. This momentum shifts down. Price comes down. It comes up. I take this breakdown right here. Here's my stop loss. You cut it for a loss. Now my new breakdown level's here. Price comes up, breaks it. I take it. Guess what? I made all my money back plus some. You get stopped out right there. You're 1-1 with the 50% win rate, but you're net profitable. As a day trader, what more could you ask for? Then you get a little pop to the upside here, and then it cycles back down. You take another breakdown here, put your stop right here, rolls down. You get out for that trade. You're good. Now momentum shift turns to the upside here, and we take a breakout right there. That never happens. Up. Now we're back down. We wait for a breakdown here. Never happens. Up. We wait for a breakout right here. We get that right there. You go risk-free into that move. There's one winner. You have a breakdown here. Price never populates. We have a momentum shift to the upside. We want to take a breakout right here. That never happens. We got a downward. Now we're back upwards. Price comes up, falls down. You take a breakout right here. Price expands in your favor. Price falls down. We take a breakout right here. Price rips up in your favor. Price falls down. We take a breakout right here. This looks like a little dinky move, but on the future side, that is about a 2-point move. But you probably would have got stopped out on that trade. Then price comes down, comes back up. Here's another breakout. Right here at the very end of the day, this bugger pushed up about 8 cents or 9 cents, rolled over. Coming into the very, actually, you wouldn't even taken that breakout because, oh yeah, you would have. That was a good breakout. But once again, my goal is to get 2 winning trades a day, walk away. And I don't like to trade after 12 o'clock. I feel for my strategy and my techniques, since I'm more of a scalper, quick in and out, higher volume, I like when the quick move happens. 9:30 to 12 is my time. 12 to 2 is the worst time for me to trade because typically we're waning or trading sideways. And then from 2 to 4, you got the craziness. That right there is butter. So coming into next week, if you decide to join us and you take the butter calls, the butter puts, or the breakouts or breakdowns, we're referring to that chart. Moving along. Now we're going to speed it up a little bit. On this chart right here, we have 2 different systems. We have Boogie, Beast Mode Boogie, and we have our floor plus ceiling. Beast Mode Boogie has 2 rules. We have this moving average, which is custom, and then we have this orange one right here. When the orange one is below the slower one, our environment line, we are expecting bearish moves, right? And the orange line is above it. It's crossing to above it right now. We expect to get expansion to the upside. When we are in a downtrend, right, like right here, a technique that you could use, you could wait for these reversal arrows to print, take a short right here, put a stop loss there, price pushes down. You could take a short right here, put a stop there, price pushes down. We're still, this orange line is still underneath. Now it is above, and we'd expect to really get breakouts to the upside when Boogie changes to the upside. If we go back and look at yesterday, our Boogie trend told us we're bullish. You might have wanted to take a reversal arrow up. There's a little scalp. Another reversal arrow up. There's another little scalp. Or if you want to be safer, you could use these arrows over here if you wanted to. Then when it crosses to the downside, we expect to get moves to the downside. Reversal arrow down. You got a little bit of expansion to the downside. More expansion to the downside. You're seeing a trait here. When this orange line is below, typically we get stronger sell-offs to the downside. When our orange line gets above it, we typically get stronger pushes to the upside. The $1,000,000 question is how far, how fast, and how quick. We never know that, but just trading with the probability. Right here, we have no idea what's going to happen, but you see where we cross to the upside. Now we're trying to take expansions to the upside. Look, price expands to the upside, resets, expands to the upside, resets, expands to the upside. We're still bullish right here. Does everybody see that? That is how I use Boogie as a trend filter to keep me on the correct side of expansion more times than not. Is it 100%? Absolutely not. But what is? Trading is the game of probabilities. Second system, our floor and ceiling. The market opens up. These lines will auto-populate. Our top line is our ceiling. Our bottom line is the floor. What happens is whatever level it breaks, the floor or ceiling, if it breaks the ceiling, we're taking calls right here. If it breaks the floor, we're taking puts. My hard stop is the floor in calls. I measure my move. Here will be my target. Here will be my halfway point. At the halfway point, you want to go risk-free. Today would be a winning trade. This week, Monday was green. Tuesday, lost one, won one. Wednesday was green. Thursday was green. Friday was green. 4 out of 5 days this week trading only the floor and ceiling. You would be net profitable if you traded it all week long, and that is what we expect over time. But once again, you still need to use proper risk management. Just because I told you that we expect to be green at the end of the week does not mean that we are green every single week, just trading that technique. But when you come in and trade that technique with butter or some breakouts, you have an even greater advantage. But once again, that's my opinion. So this system has 1, this system has 2, this has 3. Remember, this one is butter, this one is boogie, this one's floor and ceiling. These 2 charts right here have 1, 2, and 3 in them. 1, 2, and 3. For teaching purposes in this Friday class, we have 2 SPY charts, right? But on the Qs, it's everything 1, 2, and 3. And on Amazon, it is everything. We did that for simplicity purposes. So for new folks coming in, they might not get as confused. And it will be easier for one to understand if they see it different. Another common question is, well, what do you like the best? Well, I've been trading most of these systems for a while. Butter, I've probably been trading the longest. So I know they work over an extended period of time. I do like them all. My answer is I like the winning one. The problem is which one's going to win today? You know what I mean? In the end, trading, like I said, you hear me say all the time, is about consistency, following your plan. Brent might like butter. Carmelisa might like breakouts. Kim might like everything. Barbecue Bob might like reversals. If that's what you like and you like the tools here, it will give you an advantage, but you have to stay consistent with the plan that you take. I can't make you trade like me, but I can show you what I do, and if it makes sense for you, then follow the lead. If it doesn't, then hey, you can still hang out, have fun. We are a crazy group of people. Excuse me. Moving along. This chart down here where the star's at, we call this SPY Crusher. I do not trade off this chart solely by itself. This is strictly for a trend. This is a 15-minute chart. 2 sets of rules. When you have a down orange arrow and a red candle, the trend is down until what? Until you get an orange up candle and an arrow. Now our trend is to the upside. It's that simple. Whatever trend SPY Crusher's in, I like when things line up for that. That is just me. That right there keeps us on the correct side of the trend. You come look at yesterday. We're in an uptrend. You traded futures. You're on the correct side of expansion. Then up here, we got put in a downtrend. We got more expansion to the downside. Then here we got put SPY Crusher to an uptrend. Look what happens. Price expands to the upside. Now keep in mind, once again, this is on a 15-minute chart. So you have to understand that.